Hey, what's up, guys? Good evening. I'm recording the call, by the way. I'm just putting that out there. Hope everyone is good. And if you can hear me, please just react. Send it. Okay, thank you. And just react so I know that you are listening. We're going to start very soon. We're going to start very soon. Just give like 3 minutes or 4 minutes for guys to join us. Yeah, what's up? Good evening, guys. If you can hear me, please just react. I want to go through the course outline to see where we are going next. So accumulation, manipulation, and distribution. That's nice. Okay, so the next thing we're going to be discussing is the power of three. I hope you have with some kind of notes or some kind of jotter. If you have with a jotter or notes, please react. Kindly react. So I know those that those that are serious. Okay. If you don't have a jotter or notes, I would advise that you go and get a jotter or a note. So firstly, I must apologize about some contents that that were put up on YouTube, and me referring to the Melambit Trading Group or the Google Drive and all of that, and in not making that available on the description of the YouTube video. So I apologize about that, and going forward, I would rectify the issues. But I believe that most people here are from. I believe that everyone here is from the Melambit Trading Group. But then again, I also have to keep in mind that I'm posting this on YouTube. So yeah, but if you are from the Melambit Trading Group, some of you on the call are new, some of you on the call are not. If you are new on the call, I say it all the time, but just because of those of you that have refused to pay attention, on the group, there's a group description. That group description is a link. Click that link, and if you click the link, it basically helps you out with everything that you need to get started or get up to speed. Let me put it that way. It gives you everything that you need to get up to speed to where we are or the point of discourse that we are right now. So yes, that's that about that. All the videos are there, all the lessons are there. Then the Acetrove YouTube channel also has all the videos. If you don't want to go through the group description, I don't see why you should not. But if you don't want to go through it, the Acetrove channel has all the important videos. You could just all the recordings of every class that we've had basically. So yes, today we are going to be discussing something very, 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 very important. If you can see my screen, please just react. I want to be sure that you can see my screen. Okay, very good. Very good. Also, if you have now is not the time for questions, but if you when the time comes for questions, just use the chat box. Chat box is important. So yes, I'll be going to my trading view now. I will be having the discussions from there. Okay, so what's going on? Okay, perfect. So I'll be discussing something very important today, which is the power of three. Right? Every candlestick, every candlestick basically functions this way. Every candlestick functions this way. We have the accumulation phase. We have the manipulation phase, and we have the distribution phase. Now, if you go into the Melambie group, right, the DP of the group basically has this the power of three, right, and every single candlestick, every single candlestick, well, there are exceptions, but let's not focus on the exceptions right now. But every single candlestick, as you see, basically has this has this the power of three, right, on every single time frame, right, on every single time frame. I'm going to try as much as possible to explain. I'm going to try as much as possible to explain in the absolute best way possible that I can. Right? Oh God. I'm going to, sorry. Uh, can you guys still hear me? If you can hear me, please just thumbs up. I want to be sure that that did not disturb the network. Okay. So we have the accumulation, the manipulation, and the distribution phase, right? So let me pick a candle. It doesn't matter the time frame. The time frame is unimportant. But if you look at this candlestick, if you look at this candlestick, right, this big red candlestick, right? Now, when you see a candlestick like this, now you know this is a sell candle. And I've explained before that the color is not what makes it a sell candle or a buy candle. The color only helps with visual representation, right? As I've explained before. Why is this candle a sell candle? It's a sell candle because price closes, or price closed, right? Price closed below its opening price. Price closed below its opening price. So it's just simple logic. If I'm a trader, I go to the market, I buy a car for 5 million naira, right? And I sell that car for 3 million naira. I took a 2 million naira loss, right? Because I sold below my initial purchase price. That's the same logic that candlesticks have. This is a sell candle because price open here, price close here, closed below its opening price, right? This week shows the history of a candle, which I've explained before in the past. It showed us that price at some point got to this low here. It also shows us that price at some point got to this high here. So at some point, this candle was a bullish candle. At some point, it was a bullish candle. I know we should know what bullish and bearish mean, right? So at some point, this candle was a buy candle, was a bullish candle, but it reversed back and traded down here at some point and eventually went up here and closed here. Now, looking at this candlestick, right? Every candlestick or most candlesticks always have wicks at either end, regardless of regardless of how regardless of how the candle closed. If you look at this one, it's a buy candle, right? The one beside is just right beside is a buy candle, and it has wicks on the opposite side. This also has wicks on the opposite side. So now, what does that tell? What does that tell you? That tells us that if a candle closes below its opening price and above its opening price, right, signifying whether it's a buy or sell candle, right? It also tells us that we have wicks at opposite sides or at both ends. It should tell you that, okay, if this price became a sell candle, if price became a sell candle, right? And we are seeing here that at some point, this candle was a buy candle. That shows us that at some point in this candle's history, price went the opposite way, right? Price went the opposite way before initially coming back to close the way it closed. If you look at this candle, the buy candle here, you can see price opened here, closed above its opening price, right? Price at some point was high up here. Price at some point came down here. So that means this candle at some point was a sell candle, was a bearish candle, right? That means at some point this candle went in the opposite direction before eventually switching and becoming a bullish candle. Now, that switch or that manipulative move that the market makes is what we call the manipulation, right? Price opens. Now, the place where price opens is always called the accumulation phase, right? It's always called the accumulation phase. So price accumulates in a certain place, price accumulates in a certain place, or it opens, it accumulates in a certain place, then makes a fake move. Price makes a fake move into into an opposite direction, into where it doesn't intend to go, right? Before price now eventually distributes. So what does distribute mean? It means that price expands. Give me a minute, I have to pick this call. Okay, so sorry. If you can hear me, please just react. So I want to be sure that I'm connected back. Okay, perfect. So now that fake move that price does is what is referred to as the manipulation phase. So when price opens accumulating, right? You will see something like this. Oh, sorry, I'm on the daily. Wondering why. Sorry, let me go to the lower time frame so I can properly draw that out for you guys. Why is this magnet thing on? Okay, sorry. So you see something like this price, accumulating when it opens. It assumes it wants to buy, right? Then running lower, right? Running lower to manipulate. Then eventually distributing. So that distribution phase or is the expansion. You can call it expansion if you don't want to call it distribution. Then finally expanding, right? To somewhere, then coming back down to close. So this is what a candlestick looks like typically, right? We have that accumulation phase, we have the manipulation phase, then you now finally have the expansion, right? Or the distribution, however you want to call it. So that's basically the life of a candlestick. And is that logic? And is that logic we typically use to approach the market? Now, this is why we do top-down analysis. This is why we analyze from higher time frames, right? This is why we analyze from higher time frames. Now, I've taught liquidity, right? I've taught liquidity. If you look at this chart on the weekly time frame, let me zoom in. Look at this chart from the weekly time frame. Where is the nearest area of liquidity, right? You can draw that out. This low here is an area of liquidity. This high here is an area of liquidity. So this is like the recent high and low in the market currently. We can go down to the daily time frame and then make more sense of what we are doing. So now, because we are day traders and we tend to analyze things from the weekly perspective, right? You analyze from the weekly perspective, right? That help you frame your trades every day of that week, right? Now we look at the week. Now, if we know that every week basically opens having these three things: accumulation phase, manipulation phase, and distribution phase, right? The question that should be on your mind when you open the charts every week and you want to take a trade is, okay, if I'm expecting that we sell, right? I'm expecting that we are coming to seek this liquidity right here. That means I'm expecting that the weekly candle will be a sell candle, right? I'm expecting that the weekly candle will be a sell candle. Very good. Now, what are you looking for in a weekly candle? If you know that it's going to be a sell candle, you're basically looking for sell opportunities in the manipulation phase of the candle. In the manipulation phase of the candle. Now, let me explain what I mean by. Let me zoom in further. Now, look at it last week, right? Last week, last week's price candlestick. the whole week for the dollar index. So let me use a pair that is tradable, pair that I can trade. Okay, very good. Right now, going off the monthly time frame, this equal highs here, this liquidity up here is my drawn liquidity. Now this is how trading makes sense, right? Even on the weekly time frame, you can see the logic. On the monthly time frame, you can see the logic, right? You can see this accumulation here. You can see this accumulation here, and then you can see the manipulation here. Accumulation, the run lower into this fair value gap. I don't think we've not started talking about fair value gaps, but I will eventually. It's the manipulation, and we can see the expansion, right? But now that we are expanding, where are we expanding towards? An area of liquidity, right? As I have taught in the other classes, this clean double tops here serve as my area of liquidity. This place serves as my area of liquidity. So this is where I'm typically expecting that price gets to. So this is how, now what I'm teaching you is a very, very serious gold mine, and you have to pay attention. Now, if I can mark out my or map out rather my area of liquidity of the monthly time frame, that should tell you that for at least the next couple of months, I have a sense of direction for the market, right? So now that I know that, okay, I'm trying to buy, I'm trying to keep buying till we get to this place. Every candle here represents 1 month, right? I'm trying to keep buying. All I have to do is wake up every morning and look for possible buy setups, right? Every week, every day, look for possible buy setups. Right now, I go down to the weekly time frame. I still have that drawn liquidity here. But before we get here, we will get here, or we will get here. Let me use the highest point instead so I don't confuse you. We will get here. Right now, every week I try to focus on buying. Now look at this week, this last week. I mistakenly dropped my outlook for last week on the group for those that paid attention. Now look at this candlestick for last week, right? I want to buy in this week here. What I'm going to be looking for is buying opportunities during this manipulation phase. Right? And I've also thought about the fractality of price. I've explained how, okay, in this one weekly candle, we have 5 daily candles inside, right? So that's exactly where the logic is. I hope you are writing, because what I'm saying might be complex, but if you go through it multiple times, it will start to make sense. Now, in the power of three, in the power of three or accumulation AMD, you can call it AMD too. Power of three, AMD, same thing. In the accumulation, manipulation, and distribution phase of a candlestick, the time frame, right, that you are on is what basically or typically determines when the accumulation, manipulation, and distribution happens, right? If you're looking at a weekly time frame, right, you won't see, write this down because it's very important. Even me, I'm writing it down again just so that I don't lose my train of thought. On the weekly time frame, the accumulation phase typically, now this is subject to context, but I'm just saying a typical week, right? And you can go back to your chart and go and backtest this. Go and look at the data. The accumulation phase typically happens on Mondays, right? The accumulation phase typically happens on Mondays, right? The manipulation phase typically happens Tuesdays and Wednesdays. Tuesdays or Wednesday. And the distribution phase typically happens on Thursdays. And then Friday, we just have a close of the weekly candle. So you can just have a closure on Fridays, right? So what does this mean? That means for a buy candle, please write this down. For a buy candle on the if your outlook is to buy on a week, right? In a particular week you want to buy, right? Accumulation typically happens on Mondays. The false move, the manipulation, where the candle becomes a sell candle or the weekly candle looks like it's going to sell, right? Happens Tuesdays or Wednesdays. Then the distribution, where the candle now goes in its intended direction and becomes a buy candle, typically happens on Thursdays. And then Friday we'll see the close of the week. So that's how it always is, or not always, like most times, putting context. That's how it most times always appears on um on the weekly time frame. Some weeks Monday does the manipulation, Tuesday, Wednesday does the expansion, Thursday, Friday does like the closures. Sure, you get. Now, if it's a daily time frame, right? Because it's a weekly time frame, the AMD happens with the days. Please write this down. Very important. Because it's a weekly time frame, the accumulation, the power of 3 typically happens using the days. If it's a daily time frame, the AMD typically happens using sessions. Now, let me break down what I'm saying. And I think last week was a very, very good example of what I was saying. Now, this place was my target for last week, right? And if you go back to the daily time frame, you can see what I'm saying. You can see what I'm saying. This is Monday, Tuesday, Wednesday, Thursday, Friday. This red candle was one that started that week, right? Monday. You can see this is where the candle opened on Monday. Sorry, this is where the candle opened on Monday. Tuesday made the low of the week. The accumulation, the fake move, the manipulation, the fake move. Can you see? Tuesday made that manipulation, right? Wednesday did the expansion. When Wednesday and Thursday typically did the expansion, Wednesday pushed higher. You can see the way Wednesday pushed higher, and Thursday also continued that push higher. But as Thursday pushed higher too, it also started to close down, and then you see Friday closed inside. So the high of the week was basically made on Thursday, and then Friday, closed inside, right? So that is a typical week. Let me see the previous week. Let me see, because the previous week was a sale week. So it started from here. This is Thursday, Friday, Monday. Okay, very good. Example of what I was saying. This week now, Monday just did the manipulation and then it just kept selling off. But if it's a daily candle now when we zoom in, this candle now represents the days of that week. When we now zoom in to like the hourly time frame, you can if it's a daily candle. Let me look for Tuesday. Very good. This is Tuesday, right? You expect that for let's assume you are expecting a daily candle to start the expansion. Now, look at Monday. Manipulation, accumulation, and distribution. Monday. This is Monday's Asian range. Okay. This is Monday. Monday was basically, you know, accumulating price. And then we see that manipulation on Tuesday. And then we see that expansion Wednesday, Thursday. Can you see what I'm saying? Right? So it's just simple logic, but if you take some time to properly understand, we'll get there slowly but surely. Slowly but surely. Don't worry. So the idea is a simple idea, right? On a weekly time frame or any candle on a daily time frame, whatever you are trying to do, right? If you are trying to buy, you are trying to enter into a buy position during the manipulation phase, right? My trade for this week, for last week, sorry, was here, somewhere around here, right? Because it's the best place to enter after it has manipulated, after it has done the fake move, right? My entry was somewhere around here, and I benefited off this expansion, right? Initially, I was expecting that the manipulation was going to at least take out this tiny liquidity here before it starts moving up. That was the outlook I put into the group last week. That to take out this one before it starts moving up. But it didn't. I started seeing price turning direction. I was like, okay, fair enough. The manipulation has happened. It's time to enter. And I did. What's happening? You can't see my cursor. That's surprising. Who else cannot see my cursor? You can see my cursor. Yeah. Okay, very good. So I can use this as well. So I was expecting that price would take out, but it didn't take it out. It just showed me that it was time to buy, and then I bought somewhere around here, and I I I benefited of the expansion, right? So that's what accumulation, manipulation, and distribution is. But down, when you now go to the daily time frame, you expect on the daily time frame, I said it happens with sessions instead. So accumulation, write this down. Accumulation typically happens in the Asian range or in the Asian session. I've talked about that. I've explained it before. I told you the time that the Asian range happens. I gave you the indicators to use on your chart to help you easily mark it out. The Asian range typically does the accumulation. The London Open or the London Q zone, which I've also explained in the past, the London Q zone typically does the manipulation, and then we see the expansion in the continuation of the London and the New York session, and then at the end of the London close or in the evening, later in the day, we see the closure of the candle. So accumulation, manipulation, and distribution happens at every single time frame, right? If any candle you see, that candle has manipulated before going into its initial direction. But we are day traders. We are not concerned with the accumulation, manipulation, and distribution of 15-minute candles, of 4-hour candles. We are concerned with the accumulation, manipulation, and distribution of the daily and the weekly candle, right? Of the daily and the weekly candle. That's how you get good positions in the market. That's how you get good positions in the market, right? You have your draw liquidity. When you have looked at the weekly, monthly time frame, you know where you are expecting to go. Oh, you have expectations for the weekly candle. Okay, this weekly candle now, based on the context, and I will explain the context later in the future. But based on the context, right, of this week and the liquidity that I have, I expect that this weekly candle will be a buy candle. Right? So where do I expect that the manipulation is going to happen? So I can position myself. To take advantage of the expansion. Now, very good. Let me now do my weekly outlook here for you guys, so you guys can see how I approach the market. So monthly time frame. Okay, sorry, weekly time frame. This is my expectation for the month, on the monthly that I talked about. This drawn liquidity here, but you can see how far we are from there. So yes, sorry, weekly time frame. I'm still expecting that we get up here. So that means for this week, I want to buy, right? I'm expecting that the weekly candle expands, and you can see that from this red candle here. You can see how price rejected up, showing willingness to buy. It rejected up because at some point that means that this candle has sold up to this point here. And then you can see this week, last week too, also complemented with a buy candle. So I also expect that this week candle we are buying. If you check the economic calendar, I would have loved to go there right now, but I would have to switch tabs, and that would be stressful. Okay, I think I can do that. Forex Factory. I have that tab opened. Sorry, give me a minute. Okay, very good. I think I switched tabs. Yes. So perfect. Going to the economic calendar, what can you see? Monday is a silent day on the economic calendar. Tuesday, we have very heavy CPI news. Consumer Price Index is a very, very heavy news. So I expect that whatever I'm going to be doing on the market this week. Now, this is how you plan trades, right? This is how you plan trades with context. This is why it makes no sense that if you're a day trader, you take trades every day. Now, I hear some people come to my DM, like, oh, okay. I tell them, okay, tell me your trading plan. Oh, I want to take 2 trades max per day. And I'm like, if you know what you are doing, if you have a weekly outlook towards the market, it's impossible that it's not impossible, but it's illogical that you are taking 2 trades a day. Except maybe, okay, you had an idea. Price did not initially go in your idea, then you took an initial loss in the morning, and then in the afternoon you tried, when price is now going with your initial idea, you try to take advantage of that. Yes, that makes sense. But having 2 separate ideas in one trading day, I don't see how that makes any sense if you have an outlook of the week. Now, as I was saying, back to my conversation on how you plan trades. Now, I have a draw liquidity, right, of the monthly time frame that you guys have seen, but I cannot trade off the monthly time frame because I'm a day trader. I'm not a swing trader. Okay, weekly time frame. How do I expect that this week plays out? I want to see a buy candle for the week, right? CPI. We have CPI on Tuesday. We have PPI on Thursday, right? Both USD news. USD news are always very heavy news. And then we have core retail sales on Friday. So this week is a very heavy week, which is good. Because when you see heavy weeks like this, that means that price is very likely to expand. We are likely to see big bullish expansion. You are likely to see strong expansion. Sorry, not bullish, strong expansions. But in our case here, we want to see bullish expansions, right? So now going back to the chart, I want to see a very strong bullish expansion towards the draw liquidity for the week. But how do I bank on this week's price action? In the sense that where do I expect that the manipulation for this week is going to happen, right? So that I can enter during the manipulation phase, not after price has already expanded. When price has expanded, it now becomes difficult for you to try and enter into the trade that time, because then where do you put your stop loss? You can't put your stop loss in a place where you know that where you expect that price is not going to come back to. When price has manipulated, it doesn't come back there. So now this is the weekly time frame. My expectation is that I want to see the weekly expand. Now I go down to the daily time frame again. How do I expect that this week will expand? I look for imbalances that price can use as a rocket, right? That price can use as a rocket. Now, I've taught imbalances, if I'm not mistaken. Right here, we have a fair value gap that was open, price tapped into the fair value gap and then expanded. He used the fair value gap as what? Support, for lack of better words. Support as a rocket to fire price up. That's why last week's candle manipulated into that fair value gap and then went up. When it expanded up, what did it create? Another fair value gap. Another fair value gap. That you can already see price when Friday closed, you can already see Friday already trying to stroll into that fair value gap. That is how you plan trade. So new weekly candle, right? You expect that Monday or Tuesday. Monday does not have any news, so I don't really have a lot of expectations for Monday. So I expect that Monday will manipulate. Maybe Monday will start strolling into this place, but I will not be taking any trade until after CPI news, because Monday can enter this fair value gap now, right? And I'll go and enter trade, and then CPI will now come and then push price lower. That will be very bad. There you get. So the idea is simple. You expect that price uses this place as uses the fair value, this imbalance here, as rocket to push price higher. That's the logic for the week, right? So basically, I'll wait for price to get here. When price gets here, then I will now use one of my entry models to enter price. Entry models, I will teach you those later. That's the last phase of this whole mentoring program, the entry models. Right? So now what I'm expecting basically is that I'm expecting for the weekly candle to manipulate into this imbalance and then use it as support to take price higher. Right? Now, I expect that this will typically happen between Monday and Tuesday. Between Monday and Tuesday. You expect the manipulation to happen between Monday and Tuesday. And then I expect the expansion to be Wednesday, Thursday, but a bigger expansion on Thursday with one news is that PPI, core PPI. Right? You can see how you can framing trades is easier. So now, when I know that that's my expectation, what am I looking for? What am I looking for on the chart on Monday? I'm not looking for anything on the chart on Monday. If I know that I'm not going to take any trade until after CPI, I don't have any business on the chart on Monday and on Tuesday until after CPI. There you get. So that's how you eliminate and make trading easier and better for yourself. right? So yes, so today we've discussed accumulation, manipulation, and distribution. So okay, we've discussed accumulation, manipulation, and distribution, and how or where to expect manipulation to happen on a weekly candle, boiling down to the daily, right? On what day do you expect that manipulation to happen, and how you can position yourself in the market to take advantage of the expansion of the distribution of the candle. So if you don't understand what I just explained, please I would love to, you can type your message in the chat box. But I'll still send some explanatory videos that properly explain it so that it will be more easier for you guys to understand. But if you understood what I taught today, can you react? Okay, perfect. And if you don't understand, you can drop a message in the chat box and I would approach you. Or you can drop any message in the chat box. Any questions you have, you can drop it in the chat box. I will attend to it. There's no message in the chat box, okay? Please ask your questions. Oh. It's better to ask your question now. Like, don't come to my DM and be like, oh, I don't understand. Just ask now so that I can address it because somebody here might also not understand. It's just best to help. Oh, yes, perfect, 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 perfect question. So we are basically avoiding accumulation, entering at manipulation, and exiting at the end of distribution. Bro, perfect. You literally summed up for forex trading or trading generally. But I need to write this down. I need to take a screenshot of this. I need to take a screenshot of this because you basically explained everything that you like. What you are trying to do is basically this: avoiding the accumulation. Because if you enter at the accumulation, where do you put your stop loss? Nowhere that logically makes any sense. Because when you put your stop loss, price will manipulate, take you out, and then now be going into your direction. Then you get. So it's best to wait for the manipulation to happen. Enter the manipulation. Then that's when you cannot put your stop loss at the manipulation. If it's a sell candle, right? Price will first run up before coming back down. When it runs up and you enter and you put your stop loss at that high, price is never going to come back to that high because that's the manipulation high. And then you benefit from all that distribution or expansion. And then at the end of the distribution, you leave, right? And how do you know the end of the distribution? Liquidity. Liquidity is how you know when a distribution has come to an end because it has to take some form of liquidity before eventually turning or before eventually you get. Are we going to get the recording? Yes, you get the recording. Um, no, it will be posted on YouTube. So you can just go to YouTube and find it. So any other questions? Any other questions before I call it a night? When will I teach about fair value gaps? Hmm, interesting. I could swear that I've thought about fair value gaps or what do they call it? Imbalances. I could swear that I've thought it. But let me check. Let me check. Yes, I have. It's literally the last. It's literally the last video on the Acetrove channel. So yes, I've thought fair value gaps, but I will still touch on it. Yes. What do you mean? CPI affects day trading a lot, a lot. CPI, yes, the link will be dropped. CPI affects day trading a lot. CPI is a very important economic news. It's literally I say literally a lot. I'm sorry. It's the news on consumer price index in the United States of America. It's the biggest economy in the world. Everybody's looking at what their consumer price index is saying. So you have to also be looking at those kind of news. So you have to be very sure that if you're in the market when those news drop, you have to be very safe in the market. And if you know you're not going to be safe, just don't be in the market because they will fuck you up. So you basically have a trade per week. More or less, more or less. I plan to take only one trade every week, more or less. But sometimes, I take two. Most times I take two trades. Not most times. If I have a winning week, I take 1 week, one trade. If I have a losing week, like if I lose very early in the week, like if I enter a trade on Monday or Tuesday and I take a loss, I might still be opening to trading Thursday, on Thursday or Wednesday. But if I take a loss on like Thursday, that's the end of the week for me. If I take a loss on Wednesday, that's most likely the end of the week for me. So most times I don't always take more than two trades a week. Can I talk about how the AMD works on the daily time frame again? Yes, as I said, on the daily time frame, what represents the accumulation, manipulation, and distribution is sessions, Q zones. That's where you frame your own accumulation, manipulation, and distribution. If it's on the weekday, on the weekly time frame, sorry, it's the daily that does it, right? If it's on the daily, it's the sessions. And those are the only two time frames that we are concerned about as far as accumulation, manipulation, and distribution is concerned. We have no business with any other time frame as far as manipulation, accumulation, and distribution is concerned. Yes, so that's that. Um, for instance, we are trading on daily time frame and we use the top-down method by going to the weekly time frame to eat out liquidity and how to analyze our trading on daily time frame. What I want to know is that trading with respect to AMD on daily itself and not weekly because we only need to get. Yes, that's my point. That's my point. But the thing is that you cannot do one without the other, right? When you mapped out that area of liquidity, you mapped it out. Ooh, I forgot to see low dollar price. Sorry about that. When you mapped out the liquidity, right, on the higher time frame, it could be the monthly or it could be the weekly. Those two eh, are preferable, right? To map out your drawn liquidity, right? Now you mapped out the drawn liquidity on the weekly and monthly time frame. You go back to the weekly time frame, right? Because that's how you map out your trade. Okay, I want to trade this week, but I want to let the manipulation of this week get out the way first, right? The manipulation, I've told you the days where it's likely to happen. Then, when the manipulation has happened, you now go to the daily, right? The sessions, and that's how you end. That's how you find your entries. That's how you find your entries. So it's like daily, weekly, monthly to map out liquidity, weekly, daily to map out the accumulation, manipulation, and distribution of price, and then hourly time frame, 15 minutes, 5 minutes to find your entries. So why do you trade on Mondays if Mondays accumulate and we're supposed to avoid it? I just gave an example that sometimes Mondays can do that accumulation. Sometimes Monday can do that that manipulation, because there are some weeks that, trading is frequency. This week, the way this week is going to trade is because of the way last week traded. It's frequency. It keeps going. Every single week in the market tells a story for the next week, right? So if you have an open fair value gap that opened on, let's assume this week now we expanded and opened a fair value gap. So Tuesday, Wednesday, Thursday expanded, opening a fair value gap, and Friday goes to enter that fair value gap. You cannot expect that Monday will take out Friday's low. Let's assume you are buying. You cannot expect that Monday will take out Friday's low. So on weeks like that, it's very rare that Tuesday will do the manipulation. It's very almost certain that Monday will just open and start buying, right? But it takes your understanding of liquidity and imbalances. So all these things, they work hand in hand together. You have to merge everything together. So that's why I said that sometimes Mondays can be the one to do the manipulation. You just have to enter into the market on Mondays. I've taught sessions before, Adam Adebayo, so go and check the other videos. Is there a possibility for expansion on Monday? Very, very possible. It's very, very possible. As I said, it's not set in stone that, okay, it must be this day, it must be this day. I'm just telling you when, you know what? Now that you've mentioned it, this is everybody's assignment, right? Map out every weekly time frame. Map out every weekly time frame, and then drop to the daily time frame, and also map out where the low of the week was formed, where the high of the week was formed, and just do that. Do that for like the last, maybe the last 15-20 weeks on your chart. Any chart, any pair, just do that. Check it out. Check it out. Do your homework. So it's already 9. Thank you guys for coming. I hope I was able to provide a lot of value for you guys tonight. And if you were able to get a lot of value, please can you react? Okay. Thank you very much. Have a very wonderful week ahead. I will try as much as possible to, maybe just to make what I've said make more sense. My trading week, I'll try as much as possible to keep you guys updated and you guys see how I plan trades, how I take trades, how I take losses, how I take wins. Yeah, have a lovely week. No.